All right. Good morning, everybody. Hopefully, y'all had a good day. We broke through a critical level yesterday. Got a lot of economic events on the table this week, which is why we want to kind of look at those in advance as usual. All right. So, if you're new to the morning briefing, well, then welcome. To start out with a perspective on the events of the day, some free sources that can get you pointed in the right direction is FX Street. You can see I'm not logged in. If you go to FX Street, the calendar is like the first thing that pops up. They give you a little bit of perspective on the dollar most mornings. And then after you set your time frame, they give you a perspective of the events for the day. They are color coded by their anticipated impact level. Now, this isn't a guarantee. There are times where something that normally wouldn't be impactful suddenly is, or something that normally is impactful this one time isn't. So, it's more of a historical background. Generally speaking, when these numbers come out, what kind of impact does it have in the market? The darker the color, the more anticipated the impact. When it comes to seeing the results that are reported, Financial Juice is another free one. I do recommend signing up for a free account. It doesn't cost anything. But if you sign up for a free account, you can adjust the news feed so that you can perhaps turn off the things that don't interest you, right? If maybe you don't trade stock and you only trade futures, or maybe you don't want to listen to CNBC and just get flooded with a bunch of extra data that really isn't pertinent to the kind of trading that you want to do. For a free resource, this isn't bad at all, right? You get what you pay for, obviously, but yeah. So for today, we do have additional auctions again. Yesterday they were at 11:30. Today they're at 11. Really important, but we also have the 1 o'clock time frame as well. Don't sleep on those guys. I know they don't get the kind of news that job numbers get or things like that, but can't tell you how many times I've seen the market turn on a dime right when these reports come out and go from a range bound market to a trend, or from a trending market to a range, right? So at the very least, you wouldn't want to be trying to get into a trade, maybe running a tight stop, and then have one of these reports come out and just get you stopped out. We have Red Book today as well. Tomorrow we have the take this job and shove it numbers, the JOLTS. So we got some really big ones coming in. CPI on Thursday, it's a real big deal. A lot of our market right now is just kind of holding its breath in this wait and see for some of these numbers. Today, Apple has a product event. It's kind of a big deal. Going to definitely want to keep your eye on that. This kind of covers some of the things that I was just talking about, but as you can see, there's a number of events this week. Something to do with one of their cheaper phones, right? So it's worth keeping an eye on. The name of this morning briefing, this joint bond, is a EU proposal on a way to get money for security and to pay for natural gas or other resources. And the market really liked that news this morning. That's why we started to see a turnaround in the futures. So on Thinkorswim, we go to Market Watch. If your calendar is really cluttered and full of crap like this, you want to kind of narrow it down a little bit. Just hit the show all and turn everything off, and then come in and hit Econo Day event. That will bring up just the events for today. We went to those other places first because this doesn't always have all the events in it, especially we won't have that this week, but especially if there are any Fed speakers that are going to be out there, or if the president's scheduled to talk or anything like that, it won't show up in here, right? And we won't have any Fed speakers this week because they go into silent mode before they have their FOMC meeting, right? So at least we don't have them out there chipping their teeth. Yeah. 8:30, 8:55, 10, 11, and 1. So, it is kind of a full house, not as bad as it has been. Just kind of be aware of the numbers. So we went from one cog line to another one yesterday, 43.11 to 42.11. And then it got really nasty yesterday, but we did manage to get back above that 4,200. It's a critical line in the sand. It's been the lower end of the box for a while. We came outside that box and then we came back into it. Now we're headed back down. That 41.11 cog line is going to be an impactful one. Uh, that's the destination, right? If we can't hold this level this morning, then 4,100 is our first stop, and then 4,000 flat. So that's kind of the focus on the direction that we're headed to, right? We did get a J hook up, so at the very least, we have that on the day. If you look at the volume profile versus the volume by time, you can see we're outside of the box. Expectation when we're outside of the box is that we go back inside the box. Of course, none of these technicals are going to matter at all if the news out of Europe and the Ukraine are negative, then it won't matter where the box is, right? We're going to go in the other direction. So we're talking about without any external input news wise, then we would look to see this continue and reclaim the levels of yesterday. Institutional pivot points, right? They're the key right now to everything that we're focused on. So the market really liked that joint bond proposal. Going to be looking for anything that comes out along those lines. Just keep your eye on FX Street. That and the news. Everything this morning, sector wise, is pushing really hard to the upside. There are a few names that are not really participating, but everything else is. So when we're looking at the futures, we're trying to get a gauge on what kind of day are we looking at. The sectors are a really nice heads up. Typically, it's the S&P with a perspective on banks or finance and technology. Those are the two risk-on sectors. So we need to see those two either work together or one of the two. The issue, however, is this move that we had in the bonds and the move that we've been seeing in the dollar, right? So the NASDAQ 100 doesn't have financials in it, but the S&P does. We typically need at least one of those two risk-on sectors to get any kind of real solid trend across the board. If it's going to just be one or the other of those two sectors, we could perhaps limp along. It'll really depend on if we have the fangs come in to back us up. So a little bit of that weakness, IGV and cloud, those are two ETFs that we use for a different perspective in tech, both showing some weakness, and minerals mining sector is still weak. Had a real change of course yesterday in that one. Bitcoin up significantly, airlines, but on the airlines, really, you got to look at it as just a linear regression, right? Mean reversion. So I had someone asking about failed flags the other day. And while I covered it in the stream the other day, I pointed it out again. Flags are continuation patterns. So if the flag fails to continue and instead begins to base, the trade setup that we built for this is called a failed flag. It has nothing to do with an actual flag, right? Where you have flag patterns. It's a trade setup, and the Busby is the entry on that. And we run it with reciprocation plays back to the previous levels. Maybe it needs another name other than a failed flag. You're basically just trading the breakout of that basing pattern after a trend to the downside, right? There's videos on that on the Bullish Bears at Next Level Library, so you should be able to find it, right? It's a nice little setup. I like the 15, but you don't get very many of those, right? So if you want a higher frequency, just go to your lower time frames. All right, same thing with the NASDAQ. We're outside of the box. We are threatening that previous low. And if you think about the way that Investors Business Daily really kind of highlights on their double bottoms, they bring in the perspective that when we revisit those lows, we actually want it to go lower than the previous low, right? For one thing, you got to think about where all the liquidity is at. Just like we've discussed in pivot point trading, we don't want to try to get an entry right at the previous pivot point or right on the pivot point, because price aggregates, it's very likely to expand past that pivot before turning. Bring that same logic in with a double bottom. We're expecting an expansion past the previous bottom for a lot of different reasons. But a good double bottom or double top, if you want to flip everything over and go the other direction, should and does extend beyond the previous bottom, right? You don't have to take my word for it. You can go over to Investors Business Daily, start working through their patterns, and read all about it. So 13,000 is going to be that downside focus. Bring it out to the higher time frame. Like I've said before, you always want to come out to these higher time frames, and just if there's nothing there, then fine, there's nothing there, but at least you looked, right? If you don't look ever, then I guarantee you'll never find anything. But you want to at least come out and take a look. You can see that the expected move for the week has already been breached. Now, we did make it back inside the box momentarily, but that was a significant move yesterday. Lock limits right now are at 7%, so that's something to keep in mind. That's a big number, guys. Um, but they had recently changed the lock limit laws, so that's what we got, 7%. Now, there's lock limit laws for nighttime, and then there's lock limit laws for the daytime. If you're trading as a day trader, I highly, highly recommend that you go in and check on the new laws. Make sure that you are aware of the situation and how far the market can move before those lock limits are going to trigger. Uh, if you guys remember during the Corona crash, when we were rallying back up out of that, they actually removed the lock limits in the later part of the day. They would turn them off at 3:30. And that removal of lock limits in that last 30-minute time period was a petitioned situation. They had reached out and asked for those lock limits to be removed. So, sometimes the changes are temporary, sometimes they're permanent. You always want to make sure you have a grasp of what the current situation is when it comes to those lock limits. Don't just assume that you've checked it once and you kind of sort of maybe learned it and now you think you're good to go, because they will change on you. With the institutional pivot points in play and being inside of yesterday's range, that's pretty much what we're going to be expecting to maintain. The low of yesterday and the low of the Globex would be like a zone one. We'd focus most of our trading within that zone as long as nothing really negative comes along news wise, right? And the sectors are really going to be driving this, and without the news, it'll be the sectors. So it's going to be those two things. Keep your eye on FX Street. Watch for the econ to come out and just trade your setups. Be very careful out there, guys. Right? Can't stress it enough. The commodities market keeps going into lock limit. I believe wheat is on like day 4. This little bit of a rally that we're seeing this morning is more sentiment based than anything else. And they can attach whatever narrative they want to it. But, even at the low of yesterday, when we were kind of going into the close, there was already discussions of linear reversion, mean regression, of coming back up inside this move just because of how far and how fast we moved yesterday. Right. So they can say it was because of the joint bond. They can say it was because, they woke up and had a cup of coffee. They can say it's for whatever reason they want, but price action alone said we had gone really far, really fast, and we were very likely to get some sort of mean reversion afterwards, right? But it's basically a dead cat bounce at this point until proven otherwise. I would sell the rip, not buy the dip when we're talking about the equities. Before we do go over and start looking at the equities, we do want to bring in a little bit of perspective on the VIX. We're still in backwardation, although it started to kind of, what's the word we're looking for? A reduction in the curve, right? So it's not as steep, it's not as bad, perhaps. So keep your eye on the VIX market. If you don't want to use that curve, or maybe you're not on Think or Swim, then you can just look at the VIX futures and look at the contracts, how many days the contracts have, what series you're in, what expiration it happens to be, and then the cost of that series, right? In regular contango, things that are really close to expiration should be cheaper than things that are farther out in time. General time versus price curve, right? When we're in backwardation, that gets flipped over. The things that are in front are more expensive than things that are far away. When it comes to the VIX, that's basically saying that uh, firms and investors are more concerned about their immediate environment than they are about the future. Or another way that I've heard it said, uh, people are more worried that the world's going to end in the next 2 days than they are that it's going to end 6 months from now. I don't really think that analogy is a great one, but it's not mine. So I'll just share it. All right. So as I was saying, it's very likely going to be finance and technology, the two risk-on sectors, right? Those are going to be the ones that carry the load. But it has to stick, and then we have to see that follow through in the fangs. If we don't get the fangs coming in behind it, then it won't matter anyways. So as we were talking yesterday, there was somebody who said that they really struggled with that afternoon session. They were looking for an opportunity to see a rally off the lows, that midday reversal perhaps that we've been seeing. There's nothing here. What we're looking at in the lower left corner is the advancing issues of the S&P. And you can see that when we came on the other side of lunch, we kind of got down around that below the 80 level, and we never really got back above 100, right? So if you were looking for some kind of mid-afternoon rally, that'd be one of the things that you could take a look at. You would want to see some assistance here. These are advancing issues. Issues are companies, right? There's 500 companies in the S&P 500. So when this thing is sitting at 500, then every single name is advancing. And if it's sitting at 0, then there is not one single name advancing. Generally speaking, when we get below 25%, that's typically around the time that we want to start looking for our swing trade plays in the other direction, generally, right? That not in this environment, but typically speaking, right? That's a part of the whole buy the dip mentality that we've been running for years. But in the current market, just because we're overextended or we've had significant moves to the downside, you still want to find some kind of confirmation of a reversal. You should see it in the fangs, which is this upper right corner chart. It's a conglomerate. We've got Apple, Amazon, Facebook, Nvidia, Google, Microsoft, and Netflix all wrapped up into one symbol. All right. So when this candle is moving up or down, it is a aggregate of all of these names. Well, if this is headed to the downside, then the fangs are headed to the downside, and you can have 90% of the S&P running to the upside. If those are not participating, it's not going to rally. We also had cumulative tick yesterday, continuing to point to the downside throughout the entire day. Cumulative tick and then cumulative tick comparison, right? This middle lower chart, this is the NASDAQ 100 names in the NASDAQ. We're looking at how many issues are advancing, not advancing versus declining. That's a different number. This is just how many names are advancing. We dropped below 25 on the backside of lunch, and we never got back above it. In fact, it continued to move to the downside. So more and more names stopped advancing yesterday in the NASDAQ. So again, no confirmation of a reversal, no signal of a reversal, nothing more than the idea that we've been seeing that kind of trade for years. And instinctively, it's what we would generally do, right? Have a good hard run to the downside, kind of building a basing pattern around lunch, and then run it back up on the other side. But we still want to find identifying signals that confirm that bias before we try to take the trade. Otherwise, you just get chewed up, right? Had to think about what browser we were using. TrendSpider doesn't work on Microsoft products. All right, so we talked about the legacy sectors in the S&P, but that really doesn't cover things in the modern world, right? Where we have other sectors that really need a little bit of insight. The pot stocks, for an example, are not a part of some legacy 11 sector S&P concept. We have to go in and develop our own. And I was looking at the pot stocks this morning. Most of them seem to be doing really good. That could be a nice arena to play in. Crypto names. And again, this list, I just had someone asking about it after talking about it yesterday. If you go to the Smalls Exchange, these new futures products that are out, um, they have a crypto futures product, right? Well, it's really just an aggregate It's like a basket of stocks, just like the S&P is a basket of stocks, the NASDAQ is a basket of stocks. So this small cryptocurrency is a basket of stocks. Those stocks from components and weights is where we get this list that I'm using in TrendSpider. Right? So, if you trade futures and you don't know about the smalls, you're really missing out. If you don't want to trade the smalls, there's Bloomberg's version, the Fair X exchange. So I like them both, but I'm kind of partial to the smalls since I have a token that I bought long before the smalls actually had come out, which means I basically don't pay fees and commissions to trade the smalls. But FairX is on Tradeovate. The smalls used to be on Tradeovate, but they pulled them off to put FairX on. These, again, are made by Bloomberg. They're also more liquid. I mean, you got to give them credit for that. And they're only traded in the daytime, so the margin doesn't change holding them as a swing trade. Right? Because with it not trading at night, they don't have to run that same, I call it the oh shit formula. They don't have to run that little formula that says, what's my risk? That's why the margin changes as you go into the close and you go from your day trade margin to your full margin. It's a government formula. It's a calculation. Well, these don't trade at night, so they don't run that formula. They don't run that calculation. Their margin doesn't change as you go into the close. At the very least, the new smalls and the FairX both represent in their own way the NASDAQ, the S&P, and a couple other sectors, depending on which product you pick. And you can watch them for perspective in the market at the very least, even if you're not going to trade them, right? It would be like watching a different kind of S&P. So that's where this crypto list comes from. It's where the names on that list come from. It's kind of a mixed bag on the electric vehicles. There are a couple legacy names like Ford and GM that are up this morning in IO, right? Tesla, after the moves we saw yesterday, is not looking too hot yet. Looking for some sympathy play, maybe see a turnaround on everything else. This thing moves, man. I mean, it's got an amazing beta. So, out of everything on the list, when you're looking at something like Ford, it's less than a $20 stock, right? For a day trade, sure, Ford would be a good play, but if you're using stock, all right, we did get a new list made where we go over to the CBOE and gather up all of the names that were traded in February and then weed out the top 100 most liquid names in the list, the ones that were traded most heavily in the options market. That list has been made. I haven't imported it over to TrendSpider yet, but I did post it in the large caps chat room. And if you missed it, and I posted it again in the large caps chat room. So I've already weeded it down to an acceptable level that or at least, my comfort level. Yesterday, I also shared the actual download list. If you wanted to go in and perhaps take more names off of the list, right? That would be kind of your own jam, whatever you would like. It's not a great perfect list because you'll see names on there more than once. So it'll have like, the SPX, the SPY, Apple on there more than one time. So if you just try to capture the top 100 names, you're not actually going to get 100 names because it'll be repeats. So that CSV file has just been posted in large caps too. That way you can go through it if you want. I did make a video on how to get your own file if you don't want mine and want to go get your own. That video, if you just click on the pinned messages in the upper right corner of the Discord in the large caps, start scrolling, you should find it. So that's what I got for you guys. Be careful, be safe. There was a question yesterday about how come we didn't run a 0-day. Well, there was a lot of economic news through the day, including a late one at 3 o'clock. We got 3 opportunities to run a 0-day. And when you're just nickel and diming, making, 50-cent wide spreads or $1 wide spread, and you're kind of risking, say, $25, sure, you could go in and trade them, 3 times a week. Great. But the goal right now on my 0 days is $1,000 days. And I'm sizing up in there. We did 2 last week. That was $2,000, right? $1,000 a trade, 2 trades. We want 2 this week, but yesterday wasn't a good day to do them with economic events running through the whole day, right? I want to size up, get real money out of those things, and not just waste a PDT on doing a dollar wide or a 50-cent wide spread. So that's why we didn't run one yesterday. It's worth the wait to go in and do a good one, right? Than it is to waste a PDT on making it small just because we didn't want to size up due to the economics. Right? And that may not be the only day. When you look at everything that's on the books tomorrow and then on Friday, it's going to have to take it day by day, but it's very likely we won't be running one tomorrow either. We'll just have to see what kind of setup we get. All right, everybody, that's what I got. Be careful, be safe, and I will see you all tomorrow.